Shots, it's the Dividend Daddy here with another great income-driven investment. So let's say you're like me and you think AI is going to take over the world and take all our jobs. Okay, I think it's going to do a great job of pushing people out of work. The people that it displaces, I've talked about it before on this channel, I think are going to move into other fields for income, and then that's going to create competition, which pushes everybody's income down as kind of a snowball or domino effect, if you would. But I do think it's going to go up in value, and the companies that work with AI are going to go up in value. But I have the mindset of wanting to generate an income off of investments as well. So where do I go? Well, I turned to AIPI, which is the Rex Shares AI Equity Premium Income Fund. Right now, it's got a distribution rate of 36.8%, I believe. Correct me if I'm wrong down there in the comments. I might be off a little bit, but I think it's right around 36.8%. Meaning if you put $100,000 in there, their estimate is that you're going to get about $36,800 annualized for your distribution. Well, AI stocks typically are more volatile, and what they are doing is they're owning underlying AI companies, and then they're selling covered calls on them. Now, if you wanted to own an AI company, let's say you wanted to own Palantir, it's somewhere around $170 a share right now. So if you wanted to sell a covered call on Palantir, you would have to have $17,000 worth of Palantir stock in order to sell a covered call. That's a lot of money, right? A lot of us don't want to invest that much in one company. So it's nice to get a wrapper like AIPI to do that work for you. You could get a share for as low as around $43. And over the last month, that's about what it's been worth. It was worth roughly $43 to begin the month. It's worth roughly $43 to end the month. And I've had a couple nice paychecks out of that fund during that month. So for me, it's a really nice way to deal with covered calls. Yeah, I'm sure that the expense ratio is a little bit over 1%, probably close to 1.4%. I'd have to go and double check, but I don't even really pay attention to that, and I don't care because that's going to be taken out of whatever returns the fund has when you're seeing that distribution rate. Right now, the distributions are coded as return of capital, so far as I know, which is a nice little tax benefit too. So even though you're getting 34.8% in dividend, maybe you'll be able to save some taxes because it's not quoted as a capital gain. So do your research into that. Obviously, I'm not an accountant. Hell, I barely graduated high school. But what I do know is these things are presenting a tremendous opportunity for small investors to get covered call-like returns. Now, I've been selling covered calls and cash covered puts and credit spreads and buying some debit spreads. And so I've been doing that stuff for years. But I was limited on the stocks that I could do that with because they're expensive, right? You either have to use a lot of margin, which puts you higher at risk, or you got to use a lot of cash, which limits the holdings that you can have and puts you at a lot of risk as well. So these funds are great. I don't even know. I'd have to go through my accounts and count them up, but I've probably got 20 of these covered call ETFs. That way I could diversify, and hopefully when one goes down, the other one goes up. And I've diversified even further by buying YMAX, which is a fund of funds. Now, I would prefer to buy the individual funds in the ratios that I want them in, just so that I don't have fees on top of fees, because, if you're buying a fund of funds, that's what you're going to wind up with to some extent. But it is a nice instant diversification in a small price tag. I've talked about YMAX, and I've talked about Ulti, and I've got some GDXY, and I've got some AIPI, and I've got JEPI and JEPQ, whatever. I'm going to go over some of those, but specifically talking about AI stocks. If you want to make money off the AI boom, but you don't know which stock to buy, or you don't have that much money that you want to invest, if you're going to make the bet, you got to vet, all right? So you got to do your own due diligence. But I have bought some AIPI, and I like the idea of making money off the AI boom without just going out and buying stocks. Now, obviously, I do have some stocks as well. I had Palantir for years, and it was just in the toilet. Like, I had bought it for over $20, and it was down around $7 at one point in time, and I was just selling covered calls on that to generate income. And that is one of the drawbacks of selling covered calls, okay, is that once Palantir started its run, I started rolling out my calls. Every time one would come due, I'd roll it out to another and collect a little bit more credit. And I worked my way up to where my calls were somewhere around $37 before it just outran my ability to roll it any further, and my shares got called away. Okay, so I don't like the fact that your upside is capped, but that's how covered calls work. That's why these funds, if you look at them through a downturn, will lose some value and then take a long time to crawl back to what it was, if it ever does, because they take the full hit when stocks go down. But on the way up, if the stock moves too fast, it can outrun those call premiums, okay? But in a sideways or slightly up or down market, I feel like you'll see bigger returns out of a covered call strategy than you will out of just owning the stock. And typically, when I buy stocks, they go down, and then I'm using the covered calls to reduce my cost basis so they don't have to go back up much before I get my money back out of them. So that's one of the things that I've done with covered calls. Another way I do it is maybe I'll sell a put and then buy a call and create kind of a synthetic long position. You can buy an in-the-money call and then sell shorter dated out-of-the-money calls that would cover the premium that you paid for the in-the-money call, in addition make you profit if the stock is going up. That's also kind of a synthetic covered call type situation. So I've done a lot of option strategies, and I'll tell you, it's just, besides the income that I'm getting from these ETFs, it's kind of refreshing to just go in there and buy my ETF and wait for my payment every week, or in some cases every month, and not have to worry about doing all of the research on the individual stocks. And I can use that attention towards something else, like making YouTube videos, so that I can make even more money and buy more high income ETFs and hopefully be able to retire in short order. All right, guys, I'll catch you next time. But definitely, if you're looking for income and you're interested in AI, you think it's going to continue to grow, which I don't know a person on earth that doesn't think that it's going to continue to grow at this point. Just look at the AIPI, ticker symbol AIPI, and see if you think it might be a good fit for you.